Hey guys, it's Tim here, and it's been a little bit since I've done a monthly market recap video, and we had some volatility, some negative returns for the month of September, and so I figured if you're paying attention, you might be curious my thoughts on where we were at for the past 30 days and where we might be headed as we look towards the final quarter of 2021 and how we might close the year. So let's take a few minutes and let's look at this together. Important thing to know about markets is they kind of work on these average performances based on the season that we're in. And it's not a rule. Obviously, you can always break that rule. But if you look back historically, certain months perform better and certain months perform worse. Well, September is one of, if not the worst performing month on average for the S&P 500 and the broader stock market, historically looking back many decades. And I've got some data to prove that. So let me show you something here. So this is the average monthly stock market return for the last, let's call it 40 plus years. And if we look at month by month, you can kind of see a trend here. We start January solid, and we kind of bounce around, but are green for really the first half of the year. And then the second half, as we get into August and September, really on average is going to return a negative performance from the market, and we get into October through the rest of the year, we go back to green on average and make a nice end of year run. The reason this happens, there's lots of reasons why historically different seasons and seasonality brings mixed returns. Usually the end of the year on average is a positive run up for the market because most people want to not have realized gains, or they want to be in the market by the end of the year for tax purposes. And so a lot of times you'll see a lot of buying really through the last weeks and months of the year. And so September is kind of the lull where we don't tend to perform really well. We've gotten over the summer, and now we start our fall pessimism. We usually hear some news with the economy, what's going to be happening in Congress after kind of a sleepy summer. So it's no surprise that September will bring some volatility as we kind of deal with realities. And this September was no exception. We had our first real red candles that we've had in a while. So let me kind of show you where we were at in the major indexes and give you my brief thoughts on where we might be headed. So I'm doing this during market hours on Friday, October 1st. So we're going to see some things happening that we wouldn't normally see if this was happening during non-trading hours. So we're really just going to take a look at this candle right here, this big red one. This is the month of September. So what this is the S&P 500 ETF. And this type of pattern, you can see we're green really through most of the first part of the year. This is starting back in January and on up. So we're going up and up, new all-time high after new all-time high, and then we get this rush down. This is called a bearish engulfing candle. What's a bearish engulfing candle? Well, basically what it is the red candle that follows a green candle encompasses the body of it, takes up the entirety of the previous candle and actually exceeds it. So you can see here we hit this all-time high at the end of August, and we opened, and we didn't really make much of a new high, but we have been dropping throughout the month, and we actually closed below the entire body and wick of the previous monthly candle at this level right here. So this generally indicates a reversal in pattern and a bearish move. Now, keep this in context. It doesn't mean that we are going to continue to go down and down and down. It doesn't mean we aren't. It just means this is a clear trend reversal. So September, you can see, was not a great month. We're down, close to 5% in the S&P 500. And then you can see today, just the first day of the month, we're already starting to bounce back up a little bit. And because we're hitting some key levels is a big reason why that is. Let me actually switch over to, this is monthly view. Let's switch over to daily view and kind of see what's going on right here. Again, we have our normal wave patterns, where we'll go up and then we'll retract, and we'll go up and we'll retract, and so on and so forth. Well, now we've kind of hit this level where we are in a prolonged retraction. And this really took the entire month of September. And so you can see we came off our highs and we're hitting these moving averages. And then we had a big gap down right on this 100-day support, bounce up back to the 20 and the 50-day moving averages, and then could not break. And then we've continued to kind of teeter around here. And this candle right here, you can see the end of the last day of September, September 30th. You know, we look like, man, we are breaking the 100-day, but we also happen to be on the low of this candle. So you can kind of see some support establishing right here. So this first day of the month so far, you know, we have about 45 minutes to go in the market, but so far, you know, we're trying to bounce off this 100-day moving average. So we'll see what happens from there, but you can see the clear support that it has right here. And we can look at weekly and see if that gives us any more clues. This is probably a more clear signal here. We have the 20-week moving average that right now we are trying to find support of. So this is a Friday, so this will close out this weekly candle. Looks like we're going to close out right on support. So next week is going to be key. We might make an inside weekly candle, or we might bounce and head back to new all-time highs. Time will tell, but October, as you can see from my previous chart, is historically a good month for the stock market. So we'll see if that happens this time. Okay, if we look at the Nasdaq has actually been performing worse in the month of October compared to the S&P 500. And I've got some extra lines here. If you followed my previous videos, I had been tracking what's called a Fibonacci retracement, an extension. We were consolidating, if you remember, the first part of 2021. We were having kind of a falling wedge and a breakout, and this has been my level tracker. You can see, man, how perfectly we hit this level and kind of bounced around, came all the way back down and challenged breakout, and then we bounced back, and then we made new all-time highs, and then we kind of reached the final Fibonacci extension, which is this point right here, and it's no coincidence that that's where we stalled out in the Nasdaq, and then we've been retreating for the month of September ever since that level. But you can see we're trying to find support right at this 100% Fibonacci level, and so far, again, we'll see how today closes, but it looks like we're doing it. So we'll see where this leads us. But that's why these levels are so important. It's also trying to find support on its 100-day moving average. But if I switch over to, let me go to weekly view next. And you can also see we are trying to bounce. Again, look how perfectly it stalled out here at this level. And now we're trying to find support. Remember, previous resistance, after it's broken, becomes support. So now we're trying to find support on this 100% Fibonacci level for the week. And then if I look at monthly, it's going to be hard to see because it's going to have all my lines in there. But you can kind of see the month. This was down, closer to 6%. So we had a worse performing. Technology really got sold off the last part of September. There was news about interest rates going up a little bit, and that always hurts tech. For reasons I'm not going to get into in this video, but that was not a surprise there. So again, we'll see what happens month of October. We would like to see a nice green candle to maybe try to come back up and challenge this previous all-time high, or at least make an inside candle, and then maybe plod back up the rest of the year, but time will tell. Last one we'll look at is IWM, the Russell 2000. Let's look at the daily chart. The Russell's been doing something interesting. You can see I have this trend line up top here. So we had, the Russell had been underperforming the broader market after the COVID sell-off, and even before that. And so really it hadn't been doing a whole lot. This is COVID. This is March of 2020. And then really just a slight recovery, but never gaining new all-time highs for the majority of the year. And then really in 2021, it started on a tear. It just ripped higher as things started to reopen, and we had some trust back in our economy. And then we kind of hit this peak, and we've really been challenging this line a couple times, and then we've just really been kind of flagging. It's a very long, you could consider this a very long bull flag if you wanted to, because here's the flag pole, and here's the actual flag where we're consolidating in these levels. The 200-day, which is really strong support, has been coming underneath this, and we've challenged it once, held to support, challenged it again, held to support, challenged it again, and so far is holding as support. So the real key is going to be this top trend line break. Whenever this breaks, which I would expect it to break sometime between now and the end of the year. And if we really at least we're going to test it again. If we break it, then you could look at a very substantial move potentially in the Russell 2000 because of this months-long consolidation. That's what we like to see. We like to see moves and consolidations. If we don't have this consolidation, we can't, just go straight up forever. Usually there's sharper corrections to the downside when you don't have this area of uncertainty and consolidation in the price. And so again, if we look at the weekly, it becomes a little bit more clear. And then the monthly is going to probably be even more so. Yeah, you can see this is a pretty clear flag that's taking its time to develop. So really we just have inside candle after this one, inside, inside, and inside, meaning it's just getting smaller and smaller. So we are really trying to contend with where we're going. Now, bull flags can break down to the downside. It's more rare. And bear flags can break up to the upside, which is also rare, but it is possible. So don't think any of this is like, a guarantee of what's going to come. It's just clues we can look at here. So my thoughts, I kind of mentioned it already, where we might be towards the end of the year. Most analysts and market watchers can see that usually when you have this strong of a year that we've had, where previously our all-time high was up 20+%, just about a month and a half ago. Usually when that happens, we're not looking to go red for the month, certainly, red for the year, or even single-digit returns. Usually strength begets strength, so I would not be surprised if we end up somewhere around where we are now at the end of December. Maybe we need to break down a little bit further, and then we rally back and recover, or maybe this is a bounce, and we just are entering a larger consolidation period for the S&P 500. Because again, it had been just going up pretty much in a straight line for most of the year. So those are my thoughts on the market. If you have any questions, or if you'd like to talk specifically about what your portfolio looks like, and if you're best prepared for all the options ahead, and make sure that when we do have volatility like we did in the month of September, you don't have to be scared about it. You can actually take advantage because you have money to put to work, and that's where we want to be. Obviously, we're not looking to try to time things, because nobody has a crystal ball and can see into the future. But when we can be prepared for when we do have these price corrections to buy in and take advantage of it. So I hope that was helpful, and I'll try to make this more regular between now and the end of the year. Thanks for joining.